Welcome to It's the Economy. India's second quarter was marked by several lagging indicators. The IIP Index of Industrial Production, core sector growth, the Vahan registration, all of them dipped. And the worst indicator, of course, was the Q2 Nifty earnings performance, Nifty EPS rising by just 4%. And this was a single-digit rise for the second quarter in a row. So now it's time to look ahead. Was that a one-off first half? And is the economy likely to turn the corner? What are the early indications from the month and a half that we have seen in the second half indicating? With, better than usual monsoon, renewed government spending. And of course, if time permitting, I also want to discuss what FM Nirmala Sitharaman and Commerce Minister Piyush Goyal said practically to us that they want to lower interest rates, whether you should therefore expect any change in interest rate policy sometime soon. For all these questions, I'm joined by two economists, Pranjul Bhandari, the chief economist at HSBC, and Abhishek Upadhyay, the senior economist at ICICI Securities Primary Dealer. Pranjul, Abhishek, thank you very much indeed for joining us. Well, Pranjul, I'm starting with you because you put out a note, but your note, though, largely covers the quarter gone by. If you have a heat map, you say, of 100 indicators. What are they indicating for October and November?
Yes, thank you, Latha. So, because there's just so much of noise in terms of what's happening to growth, some indicators doing better than others, we brought together 100 indicators of growth. And many of them are actually, data we got for the month of October, just released a couple of days ago. So it's actually quite real time. And it gives us a sense of what's going on. Now, what we find is that about 55% of the indicators we are tracking are still growing positively. So a majority is still doing better than it was in the past. But a quarter ago, 65% of the indicators were growing positively. So this fall from 65 to 55 is something, that is really impacting sentiments. And on the margin, there is some sort of a slowdown, that has happened. Now, there are a few sectors which are better than before. Agriculture is better. Government is spending right now. Services exports are still growing at a fast clip. But on the other hand, there are some sectors which are much worse than before. Consumption tops the list there, particularly urban consumption. That has fallen off over the last quarter. And trade and transport is not doing too well. So I think putting all of this together, I think our sense is that on the margin, growth is slowing, but it is slowing to more sustainable and more broad-based levels. Like, for example, agriculture had been such a laggard for the last 2 years. We are seeing signs of that pickup now. So my sense is we'll work with a slightly lower clip, not 7% plus, but more like 6.5% over the foreseeable future. But it will be more broad-based than what we had in the past. Okay.
Do you recall which were the sectors? I think two-wheelers have done well. I saw your heat map and you had a dark green on which sectors, do you remember?
Yeah, so two-wheelers have been doing well. Some consumer non-durables have actually picked up. Terms of trade, which is basically earnings of farmers, have also been strong. Construction, which is a very important source of income for rural India, has generally been doing well. In manufacturing, consumer goods manufacturing is not doing too well, but industrial goods manufacturing is still doing well. And I think that is linked to government capex, which has picked up over the last 2 months across both central government and state governments.
Okay. A similar question to you, Abhishek. Have you been tracking any of, I know you have your own heat map as well, and you look at freight, you look at power consumption. How do October and the first half of November look like? We have 1.5 months of this quarter with us.
Well, first, the caveat, the timing of festive season is different. And what we need is, data for both October and November to make a firmer judgment about how the growth momentum is. But I agree, in terms of hard data, the auto sector retail sales, both passenger vehicle and two-wheelers, have been quite strong. Again, could be some growth is exaggerated there, but still headline numbers are quite strong and reason for optimism. Also on the government spending side, we don't have the actual numbers, but we track the government cash balance numbers, and those have really come down sharply. So the central government, the overall government cash balance would have been around 4 lakh crores after the September advance tax payments. And from end September onwards, there's been this downward trend which has continued, and the current estimate is closer to neutral. So government cash balance position has really, government surplus cash has really dwindled, and that is a sign of government spending having picked up more pace after the second quarter.
Okay.
But Latha, very broadly, I mean, more fundamentally, what we need to still acknowledge is that in terms of policy settings, whether monetary policy or fiscal policy, don't think policy settings are very tight. Also on the global side, while there is uncertainty about how the demand situation will shape up, global commodity prices at least have softened, which is good for us. So very thematically, don't think we should be looking at any big growth slowdown. Yes, it is possible growth could tread water for some time, particularly given signs of weakness in urban demand, but we don't expect any big slowdown here.
Okay, not a big slowdown. I want you all to put a number to it. Pranjul, what's your best guess? We have some positives in terms of better than expected monsoon government spending, and we have some negatives in terms of uncertainty of the global environment, and clearly urban consumption not doing well. There's no running away from that. So what's the guess for second quarter, and of course, more importantly, third and fourth?
Look, my sense is that India's potential growth, where it can grow sustainably over the foreseeable future, is closer to 6.5%. It is lower than the 7% plus prints we had gotten used to in the last couple of years. But the truth is that was off a low base. The base has now normalized, and we are now converging towards more sustainable numbers. And 6.5% is still, by the way, in the current global order, a very, very high number. But I think markets and generally, most of the analysts have to get used to this. That India
is your number 6.5? Yeah, is your number 6.5 for the full year this year?
No, for this year it's higher because we had higher numbers in the past. But for the upcoming release that we'll see for the September quarter, we are in the 6.5% ballpark. And then when we come to FY26, our senses will be again in the 6.5% ballpark.
Okay. Abhishek, just one quick question because I missed the number. What was the government cash balance? What has it come down to, you said?
Close to neutral levels, Latha, from close to 4 lakh crores after advance tax
almost
payments.
Zero. Okay. Okay. Well, similar question to you. What are you estimating in terms of what may be the second quarter gone by, which we will get on November 29th? But more importantly, what's the second half average looking like? The Reserve Bank's old number is sitting at 7.4, 7.5.
So we are at 6.5% GDP growth for the second quarter, Latha. And for second half, we have penciled in a close to a 7% growth, but we do see some downside risk to that. Again, primarily on account of the consumption demand where high frequency data has been soft. Important to look at reasons for why this slowdown has happened to make any prognostication. And here, I mean, the understanding I have is that some of the slowdown on the urban demand side could be linked to some somewhat tighter credit conditions that we've had. We know RBI has engineered some regulatory tightening, but even banks themselves, the commentary suggests that there is incipient stress in some parts of unsecured lending basket, and there has been a tighter credit provisioning therefore. So that could be a headwind which could stay with you for some time. Also on the inflation front, what we have seen is inflation has stayed higher than we expected also. Particularly, again, commentary from FMCG players, etc., indicates slowdown in metros, where it is possible housing costs, etc., which went up too fast, may have played a role. So these are headwinds which could stay with you for some time. But this at best could be a mid-cycle slowdown rather than a start of a new trend.
Okay. No, I take your point. More than interest rates, it appears that it is inflation that has sapped urban demand, metro demand. There was a Nielsen study which Britannia quoted in detail in their presentation, saying that rent has taken a huge chunk and metro did worst for them. Second-tier cities did far better in terms of demand. But very quickly, Pranjul, we had these two statements coming in from first Piyush Goyal saying that food inflation has nothing to do with interest rates and therefore RBI should cut. Well, that was Commerce Minister, we thought. But yesterday we had Nirmala Sitharaman practically repeating that to Shireen Bhan, not with so much ferocity, but saying that we need more discussion on the inclusion of food and inflation and interest rates as well, goading the banks to cut rates, to make them more affordable. So now what's your rate cut expectation?
These are tricky times, Latha. We have had an inflation print, which is not just a high number of 6.2%, but it also shows that food inflation is getting a little more widespread than it was in the last couple of months. We've started seeing cereal inflation and all rise again a little bit. Then we have, what's going on globally, and there's a lot of volatility in the rupee. The RBI has been spending reserves, and that has been sucking out some of the domestic liquidity. And my sense is, come December, we'll start seeing liquidity conditions tighten, and we'll start seeing the short-end rates rise a little bit. So it'll actually be a bit of an implicit tightening that we have there. So, my sense is monetary policy can't ease a lot right now, but yet, we have growth slowing on the margin. And once the global conditions ease a little bit, there might be space for some gentle rate cuts.
No, I just want a date. We are running out of time. What's your date? February, April?
February, but, the risks are to April as well if inflation doesn't fall.
Okay. No, sorry, out of time. Abhishek, just one word. I mean, what's your take on rate cut?
February rate cut.
Okay. Yeah, going by the building pressure from Delhi, it does look that becomes an added factor, even if the macroeconomic conditions still look, pro-inflation. Anyway, thank you very much, both Abhishek and Pranjul, for joining in and giving us some sense of what the first 6 weeks of the second half look like. It looks like we are not going to make it to the 7% GDP for sure, maybe a little south of that. With that, we wrap up on Bazaar. Chakras is coming up.